I just wanna make you mine.
Hey guys, Omar here, broker and CEO of Alden Mortgage and Nome Realty. You know, typically I would be in my little makeshift studio that I have, but you know, in Southern California for the first time in a long time, we've had terrible weather, and now it's actually nice. So I am going to go ahead and do it outside for just a couple of ones, because then it's on Monday, we're at the 25th, 26th of March. It's going to start raining and it's going to be like 60 degrees here in the valley, and it's just going to be thing. But the Feds just announced that they are going to stop buying mortgage-backed securities. Now, a lot of people have been watching these on CNBC Money and the Exchange and whatever else you're watching, and most people are like confused, like what the hell are these guys talking about with all these specific terms and whatever it is that they want to cause, talk about volatility and talk about this. So I'm going to go ahead and explain this in the most simplest way that you could possibly explain something, so you understand what it means when the Fed say, okay, we're not gonna purchase any mortgage-backed securities. So they just announced that they're going to do their final purchase, and then they're going to go ahead and let it go from there on in until we kind of get a little bit of stabilization in the market and everything kind of goes the way that it used to be. Because right now, let's just face it, home prices are crazy, everything is getting more expensive, and it's just getting bananas out there. It's just getting nuts. Did I just say bananas? Whatever. Okay, so mortgage-backed securities, okay, when they are in this market to go ahead and buy these MBSs, these mortgage-backed securities, that means that they are purchasing so many of them to keep, the Feds were keeping it, the interest rates low, because they're purchasing and leftover, hand over fist, they're purchasing. So now that they said that I'm not going to go ahead and purchase anymore, what that means is that there's nobody buying these mortgage-backed securities, which mortgage-backed security is your mortgage on your house, right? The mortgage on your house that you're paying. They're not going to buy any more of those until the market itself starts stabilizing. And most of you have noticed that, you know, everything is nuts. You can't get people to work anywhere, and whatever, you know, it is what it is. So whenever they stop purchasing, when they take that market and those mortgage-backed securities, they're gonna essentially, what they're doing is they're gonna go ahead and counter this inflation to go ahead and increase interest rates because nobody's buying all these mortgages anymore. So whenever you buy a house, like let's say for instance you're buying a house, when you buy that house, that mortgage-backed security that you go ahead and use to purchase that house, that mortgage, it is getting insured by somebody, right? It's getting insured by Fannie Mae or Freddie Mac or whoever it is, right? Once they insure it, that means that they're insuring it at that percentage rate. Then they go ahead and sell it into the secondary market. The secondary market is, of course, the stock market, right? The New York Stock Exchange, any other stock exchange. So they are the biggest buyer out of all of them. So because they're stopping it, that means that the interest rates, as if you've seen, you could watch some of my videos as I keep you up to date on interest rates. Interest rates are steadily creeping up. You know, just last year we're like in the 2s. Now we're 4.95. You know, it's steadily increasing. So once they do their last round of purchasing, where are we eventually going to be? I don't know, but how is this going to affect? Is this going to affect housing? Is this going to affect credit? Is this going to affect, what is this actually going to affect? Yes, it's going to affect everything across the spectrum, okay? It's not going to just affect housing. It's going to affect everything when it comes to, because you're essentially, you know, you're manipulating the total credit that you're able to go, the interest that you're putting on the credit that is being lent out to people, right? So when they stop purchasing all these mortgage-backed securities, interest rates are going to start creeping up. We might actually see 5.5, 6s. I will not be surprised at all. And what does that mean for the whole entire housing community? Now, the housing community is very, very correlated related to exactly what is done by the Feds with these mortgage-backed securities. Now, as soon as they start buying, and now that they stop, that means that interest rates are going to go ahead and increase. That doesn't mean that everybody's salaries start increasing. That doesn't mean that you're all of a sudden randomly going to just start making more money. Well, unless you work for one of those companies that are really cool, and they're going to go ahead and give you that pay raise to kind of get into that into the current market that we're in and the current expense ratio that we have in this current market. And so if you have one of those companies that are kind of doing that thing, then that's all great. But for the most of us, for all the rest of us out there, we work for a living, especially me. I am a mortgage broker. I own a real estate mortgaging company. We are always going to be on the buyer or seller market, but what's going to happen is that as interest rates increase, that doesn't mean that all of a sudden that you're still going to be able to qualify for that house at that 2.5% versus the 5.5% to 6%, right? It's not gonna think. What's going to get calculated is going to be your debt to income. Now what we have is their back end ratio and your front end ratio. Now the front end ratio is going to have to be at a specific amount, right? 37%, 35 to 37%. Back end ratio will be between 43 and 47%, depending on the mortgage products. Some of them actually go up to 55%. Actually, FHA goes to 56.99%, and then you have non-qualified mortgages that go a little bit higher. But in the essence, in the grand scheme of things, right, your dollar, the amount that you get paid from your employer, is still going to stay static, right? It's going to stay completely stagnant. It's not going to go up. It's not going to go down. And if it does, it's you get your 10% raise at the end of the year, or maybe your 5% raise, or whatever your company offers you. That doesn't mean that it's still countering the total prices that have gone up this year. And the total credit, that's a cost of credit, is going to start increasing. So everything is going to start increasing, because what they're doing is they're trying to go ahead and counter this hyperinflation that is happening right now because of all this money that they started dumping into the economy. And yeah. So mortgage-backed securities, that's what it actually means. They're going to stop buying it. When they start buying it, stop buying it completely, interest rates are going to go higher and higher and higher, and then eventually you're gonna, you're currently your $600,000-$700,000 house, $800,000 house, however much your house is, $200,000, it doesn't matter what it is, it could take a 20-30% decrease because the people are not able to afford exactly what they're trying to what you're trying to sell it for. So they're always going to be equally correlated. Interest rates are always, so the dividing factor is going to be A, the supply chain, B, total supply and demand for housing. But once you start weeding those people out because the interest rates are increasing, the demand is going to start decreasing, which means those homes are going to start staying on the market a little bit longer because it's going to be way more difficult to find people to put into those homes rather than any other time. So hopefully this explained it. If I didn't explain it, please go ahead and comment, like, subscribe, all that other stuff. Let me know how horrible of a job I did explaining it, or if I did a good job explaining it. Let me know. And then, like I said, I am a mortgage broker. I own a real estate and mortgaging company. So if you want up to 50% commission rebate on your next home purchase, for any mortgaging assistance, and for 0% listing fee on your next home, if you want to sell your home and you want somebody to go ahead and sell it for 0% listing in the state of California, link in the description below. Really appreciate you guys watching. Thank you very much. And I am going to enjoy the rest of this sunny day because God knows it's going to start raining here in the next couple of days. And I'm going to go ahead and go into that little hole of a hibernation, and I'm going to hate life. Hate the rain. Hate it. Until next video, guys. Thank you for watching.